Good afternoon. Today I want to present a sales case study on Goldman Sachs, one of the most powerful investment banks in the world. On January 15, 2026, Goldman Sachs reported record net earnings of 17.2 billion for full year 2025, their best result ever. Revenues reached 58.3 billion, up 60% since their 2019 Investor Day strategy launch. The question I will be analyzing is, what sales and strategic decision drove Goldman Sachs back to the top, and where do they go from here? Goldman Sachs faced was over-reliance on volatile trading revenue. This made their earnings unpredictable and alarmed investors. It got worse between 2022 and 2023. The firm made a costly strategic mistake by trying to build a consumer retail bank called Marcus, which lost over 3 billion and had to be shut down. At the same time, rising interest rates killed deal activity, and investment banking revenues collapsed. Goldman needed to rebuild its identity and return to what it does best. Goldman's situation through SWOT. Strength, they hold the number one position in global M&A advisory. No bank closes more deals. Their brand and talent attract the world's top clients. Weaknesses, revenue is still tied to market conditions. When markets slow down, Goldman feels it immediately. Opportunity, the M&A deal cycle is rebounding as interest rates stabilize. Private credit and alternative investments are booming globally. Threat, JP Morgan and Morgan Stanley are competing aggressively, and AI is beginning to disrupt traditional advisory work. Sachs had three strategic options to choose from. Option 1, stay the course, keep relying on trading and slowly rebuild investment banking, safe but slow. Option 2, trying again with consumer banking, but that they already lost billions here, too risky to repeat. Option 3, which they chose, was to fully recommit to their core strengths, investment banking, M&A advisory, and expanding into alternative investments and wealth management. This was the right call. By going back to the basic and adding high growth areas like private credit, Goldman positioned itself for exactly the kind of record results we saw in 2025. My recommendation is that Goldman Sachs should fully commit to its One Goldman Sachs strategy, deeply integrating investment banking, asset and wealth management, and global markets into a single, connected client offering. The numbers prove this works. 70.2 billion in net earnings, an all-time record. 3.61 trillion in assets under management, also a record. Number one globally in both announced and completed M&A deals. The formula is proven. The priority now is to keep executing it and expand wealth management internationally. Goldman's team should focus on three concrete actions. Investment banking, close the pipeline of 200 plus pending M&A mandates in Q1 and Q2 2026, especially in tech and energy where deal activity is accelerating. Asset and wealth management, integrate the HPS Investment Partners acquisition and scale private credit toward 300 billion in AUM. Global markets maintain their number one equities position and grow fixed income and currencies revenue through deeper client financing relationships. To close, Goldman Sachs is a masterclass in how to recover from a strategic mistake, refocus on core strengths, and execute at the highest level. A 70.2 billion profit doesn't happen by accident. It's the result of discipline, talent, and very clear sales strategy. Thank you.